All right, I think I'll start. Hello, everyone. For those who don't know me, I'm Fabrizio Santoro. I'm a research fellow here, and I work in the International Center for Tax and Development. Very happy to have this, I'm gonna time myself as well, to have this dissemination event. We are at a point where we completed a program in ACD called Digitax, where we accumulated important findings and key lessons on digitalizations in tax administration. And as Martin said, we are now setting the stage for the new grant on digital public infrastructure and tax, all grants funded by the Gates Foundation. And so the first part of this presentation will mostly come from ICD work. We first somehow frame the potential of digital public infrastructure, which I'll define in a second, for tax, to strengthen tax administration in low-income countries. ICD works mostly in Africa, so most of our work comes from that context. Then Cele will present some very practical case studies of digital public infrastructure application in few countries we worked in, and then Caroline will instead have a broader discussion on how to frame the potential of DPI, learning from her own work in the digital cluster. All right, so the first key lesson is that from our work in the last 5-6 years in SED is that tax administrations like governments in Africa are strongly digitalizing their systems and services for taxpayers. There's a huge, rapid pace of technology implementation. And this, most of this comes from joint work with the World Bank, where we reviewed the existing kind of technological initiatives in African governments and trying to extract some key findings across the continent. And just some patterns there. The first graph plots the online registration for taxpayers, which by income region goes from a minimum of 50% in low-income countries to a maximum of 90% in the advanced economies. The second instead looks at the electronic filing of taxes for personal income tax, corporate income tax, value-added tax. As you can see, that the share of online filing is quite high. And it's been rising in the last few years. All these graphs are before COVID, so imagine now the pandemic even pushed this process even further. The third graph instead compares income regions, and across the three taxes, unsurprisingly, low-income countries are lagging behind, but still, as I'll show you, as we show you later, there is huge potential for further digitalization. And interestingly, on electronic fiscal devices and electronic invoicing, low-income countries are somehow performing at the same level or even better than advanced economies. Yeah, so what's happening in African tax systems is that new solutions are being implemented, often at a rapid pace. There are solutions for registrations of taxpayers, whereby tax administration would use national ID schemes, often digital ID schemes, to better identify and authenticate the identity of the citizens' taxpayers. Tax administrations are relying more and more on digital payments, non-cash electronic payments. Think about interbank transfers or mobile money-based payments. For payments to governments like taxes, for payments to businesses, when you go to merchants to buy goods or services, or inter-business transactions as well. And tax administrations like governments in general have also been introducing better integrated data exchange systems where they would share and connect with other government entities. All these solutions that which we focused on in Digitax also build upon an earlier wave of technologies, which are those related to the integrated tax administration systems, which are solutions, platforms for the internal processes of functions in tax administrations, electronic fiscal devices, as I showed you before, and electronic filing, which of course have been proven to have quite an impact in terms of raising much needed revenue in this context. And of course, all this generates huge volumes of digitized data and third-party data, both within tax administration but also outside government entities. This data has huge potential. Now let's focus a little bit on this digital public infrastructure philosophy that comes with the hope to revolutionize the way in which governments function. This DPI is the buzzword in the current debate in international organizations, implementing agencies, donors. But let's try to understand first what we are talking about. This is a sort of an approach to digitalizations that was born probably 20 years ago in the advanced economies, and India and Brazil are probably the best examples from developing regions. And the idea, the key principles of digital public infrastructure are the following. The solutions have to build on open source, interoperable technology. Open source means that everyone can have access to the source code for that enables the solution. And this, of course, the idea is that having an open source solution would make the technology more resilient, more capable of adapting to evolving challenges and situations. A second important point that I think is quite relevant, also think of what Caroline talked about, is about the governance of these digitalization solutions. The idea is to have a robust public governance where the public institutions are supervising and monitoring the technology itself in order to maximize value for everyone, public value, increasing trust and transparency, securing data protection, grievance redressal, and of course, protecting intellectual property rights. These solutions, as India shows, as another key principle is the one of spurring market competition by promoting collaboration across a range of stakeholders. Given that the source is open, all interested actors could be involved in the process of improving, designing a given technology. I'm talking about, of course, public institutions, private actors, open source community, development actors, philanthropists, civil, CSOs, and citizens themselves. And the main purposes of this approach is to do something different than what the current digitalization processes are doing. One of the main goals is to reach inclusions for everyone, leaving no one behind, ensuring equity and empowerment of end users, reaching resilience in the technology itself, especially during emergency. I mean, unsurprisingly, DPIs gained relevance during the COVID pandemic. Ensuring sovereignty, autonomy, and flexibility to plan and design and implement. Each governments and the economies should be owning and owning the technological solutions. And of course, innovations. The idea is to spur a fair market competitions where all ideas are embedded in a new solution. It's pretty theoretical at this point, as you know, but the plan is to do some more robust research on the actual impacts. What's called the DPI stack is the combination of three key building blocks of DPI, which are the digital ID systems, which are used to identify and authenticate the citizen identity, digital payment systems, again, interbank transfers or mobile-based payment, seamless real-time payments, and data exchange systems, which are platform, internal or external, that would allow seamless, secured, consent-based sharing of data of users, of citizens. There are also others, building blocks emerging, like digital signature, for instance. Now, how we frame the promises of this approach to strengthen tax administrations? Well, there are many potential opportunities there. Such an approach would reduce administrative costs and efficiency within tax administrations, as building on digitized data sharing, and immediate, accurate identification of taxpayers. Reduce also the reporting and compliance costs on the taxpayer side. The idea is to make the life of end users much more transparent and easier when navigating complex tax systems. Of course, this would bring to a limitation in the scope for corruption and collusion, because interpersonal relations, contacts between taxpayers and tax officials are reduced. Increasing transparency and accountability, as the citizens have access, own their own data, and have access to a range of services through data sharing. The long-term goal, of course, is to improve revenue performance, but I guess we are still far from that. That's because, as our research show, we have to, of course, understand and conceptualize contextualize the DPI revolution in the context of low-income countries and probably embrace a more realistic approach. As we documented in our review with the World Bank across different countries in Africa, there are key characteristics of tax administrations and of governments in general. Still now, after COVID, face-to-face interactions tend to persist, and they come, as I said, with entrenched opportunities for collusion. There is some certain cash dependence that mobile money is a great success in Africa, but still a sizable portion of the population still prefers to handle cash. Manual processes tend to stick in tax administrations, often in parallel to digital solutions. Compliance costs of taxpayers when it comes to filing, paying taxes, and navigating tax systems are still quite high, as a colleague of ours is doing some work on in Uganda. Data governance, and I think, Caroline, we talk more about that. The regulations, the frameworks to ensure sound data governance are still limited. There are important digital literacy challenges, unsurprisingly. And when it comes to actual infrastructure, of course, DPI needs to live on a robust infrastructure of a solid broadband, internet, and electricity. Well, there are still important gaps, at least in sub-Saharan Africa. And these challenges, of course, are also, as I said before, pertain to other government entities. So this goes well beyond tax administration only. And I think at this point, I will leave it to Cele to give us some more practical insights from our research.
Yeah, thank you, Fabri. So I'm going to move here. And I'm going to present some evidence produced during the life of the Digitax grant. And I'm going to firstly approach the topic of system integration and data sharing in tax administration, and then move to digital payments. As I said, bringing evidence from various studies that we have conducted. So first of all, system integration and data sharing brings high availability of data to tax administration. In the cases that we have studied, system integration has happened mostly between the tax administration and the national identification authorities, and for registration purposes. These system integration and following taxpayer registration relies on unique identifiers, whereby to a unique identifier present in the National Identification Registry is assigned one unique taxpayer identification number, or in some cases they are equivalent, they are the same. Registration of taxpayers through national identification data happened in two different ways, can happen in two different ways. It's either ad hoc or as it happened in the case of Uganda, whereby an application programming interface pulls the data from the registry of the National Identification Authority into the taxpayer registry upon request by the Uganda Revenue Authority, or in a more systematic way, whereby the same API pulls data from the registry of the National Identification Authority into the taxpayer registry automatically when the individual turns 18 years old. Alternatively, we have seen also a different kind of third-party data-driven registration process, which is using various kinds of third-party data, for example, data from local government, national water suppliers, electricity suppliers, and so on, whereby the Revenue Authority, by going through this wealth of data, identifies some potential economic activity and automatically registers the individual that is linked to that activity through a unique identifier. And this is the case of Uganda, in case I didn't say. So this data is often used by tax administration in mass registration campaigns. And in fact, as we can see, from these two different graphs reporting the cases of Uganda and Ghana, at implementation of system integration or data sharing efforts, which happened in both cases, in Uganda in 2022 mostly, and in Ghana in 2021, the number of registered taxpayers increases dramatically. And as we can see, most of it is attributable to the registrations that happen through system integration. So in the case of Uganda, for example, the registration through ID data is the green bar, registration through other kinds of third-party data is the red bar, and the blue bar is the normal registration, so those that didn't happen through any kind of data exchange. In the case of Ghana, instead, we can see how the purple bars represent the taxpayers who are registered through the national identification data, which is the Ghana card in this case, and it's the main digital ID in Ghana. So the registration through third-party data can, as Fabrizio said, improve some of the functions of the tax administration. And we have seen, for example, that online registration using digital IDs in Uganda and Ghana brought into the tax net mostly younger individuals and businesses who were previously informal, which means businesses who didn't have any kind of already existing kind of registration and formalization status with other institutions, for example, local government or business, the holder of the business licenses and so on. So by bringing inside the tax net taxpayers who are generally more marginalized, we could, we can see how these systems can facilitate compliance of taxpayers, especially thanks to a very immediate kind of registration process that is due to the immediate attainment from the revenue authority of the data of the taxpayer for identification purposes. In the case of other third-party data-based registrations, we can see that these brought to the Uganda Revenue Authority tax registry mostly already existing businesses, so businesses who were already established and already registered with other sorts of institutions. And taxpayers who have rent and assets as the most prevalent income source. So here we can see how, to some extent, these kind of exercises helped the identification function of the revenue authority. However, this doesn't happen without some drawbacks, which I'm going to touch on later. In fact, these drawbacks mostly have to do with the impacts on data quality of the tax registry. So there is definitely part of the story is that, like, these kinds of system integrations, especially with national identity registry, do have positive impacts on data accuracy in tax registries, and this has to do mostly with reduced number of duplicates in the taxpayer identification numbers and improved contact details of taxpayers. And while in identification number duplicate and invalid contact details, as well as expands other kinds of information like gender, age, and physical location of taxpayers. However, it also has a deteriorating impact on other parts of other kind of records, for example, the economic sector information. The positive impact of these system integrations on data accuracy are not only due to the system integration itself, but a very important role of registry cleaning teams and registry maintenance team has to be recognized, and it's likely to have been quite crucial in the kind of positive outcomes that we have seen from the registry. Instead, the fact, for example, that the information about the sector of economic activity of businesses is kind of deteriorates with system integration is a very clear example of the fact that data from national identification authorities does not always serve the purpose of tax administration, because it's built for different kind of purposes, and therefore it's it's not always of use to it, and can create challenges. For example, for example, missing information or inadequate information that can be used by the revenue authority. The challenges that I've talked about imply some costs for the administrative costs for the revenue authority, and also challenges in taxpayers onboarding and tax administration capacity to enforce the law on these taxpayers. The challenges that are evident in the quality of the taxpayer registry also have some translate into impact on the tax revenue. We have only been able to observe short-term estimates of impact on tax revenue of these system integrations due to the recent nature of the policies. And we can see how this slide talks about Ghana, but the same is true for the case of Uganda. Taxpayers who are registered thanks to these system integration and data sharing efforts have lower probability of declaring any income or sales, or to pay any taxes compared to the taxpayers who registered through the more standard registration channels. And this has to do mostly with the tax administration's capacity to onboard taxpayers after they have registered them, and to enforce the law on them. This is due itself to issues of data quality in the registry, which prevent tax administration to identify, for example, what are the tax liabilities of a new taxpayer, and also the fact that many taxpayers who come into the tax registries through these kinds of registration are very small taxpayers who don't owe any tax liability to the revenue authority, or entities that are not actually economically active, and therefore not taxable. To talk about the second pillar that our research has touched, which is the one of digital payments, I'm also going to present evidence from some case studies that we have carried out. And in particular, I want to talk about the patterns of adoption of digital payments. These are results that come from a variety of studies in countries such as Rwanda, Uganda, Tanzania, Burkina Faso, and Ghana. And we see from these studies quite consistently that adoption of digital payments depends on a range of factors. For example, where the business is situated in the supply chain, and whether the transactions of its partners' business are done through digital payments. Adoption also depends on IT readiness and access to internet of the businesses, as well as on knowledge, both all about the digital tool, in the case of our studies, mobile money. So knowledge about how it works, but also knowledge, since we are speaking from a tax angle, of what are the benefits in terms of tax compliance, or in terms of tax exemptions that come from the adoption of these digital payment tools. Also, financial inclusion is correlated with adoption, as we might probably expect, in the sense that businesses who are already financially more included, like, for example, those who own bank accounts are more likely to also adopt digital payments for their businesses. And it's also noteworthy to say that this kind of digital divides, these factors that drive adoption of digital payments are have also been found by other studies to determine adoption of electronic services in tax administration, such as electronic filing or payment. So these studies speak to important barriers to adoption of digital payments, such as also customer preferences and issues of trust with regards to the technology, costs of adoption, like fees and charges, and lack of understanding of which are the benefits of a certain digital tool. And also one important factor is that there is a kind of consistent preference for cash, which despite adoption of digital tools does not decrease, is not used less in transactions. Then we have two studies which investigate whether fiscal incentives can induce adoption of digital payments, and in particular in Rwanda, we have studied a temporary waiver of transaction fees for MomoPay, which is the business account of mobile money supplied by MTN. And we're talking about MomoPay in both cases because MTN is the by far the biggest provider of mobile money both in Ghana and Rwanda. So we see that these transaction fees significantly increase adoption of MomoPay, but when the fees are reintroduced, merchants go back either to cash or to personal accounts, despite the fact that the MomoPay uptake remains higher than before the waiver. And we see no impact on revenue mobilization, which we might have expected according to the various ways in which digital payments are expected to bring some benefits in terms of revenue mobilization capacity that Fabrizio explained before. Instead, when we look at Ghana, we are talking about an exemption that is applied to customers who pay for a service or for a good to a MomoPay account. This kind of exemption from the general mobile money tax pushed a lot of merchants to acquire a MomoPay account, despite the fact that cash usage remained unchanged, and also pushed customers to shop more at businesses that were using a MomoPay account. And lastly, we saw that this exemption and the knowledge of this exemption improved perceptions of, or it's linked to better perception of the policy in general, better attitudes towards the tax systems, and better perception of government. I will end here and hand it over to Caroline. Thank you.
Well, thank you for inviting me, Fabrizio, because I think it's been interesting for myself and as well for Tony and the digital cluster in general to hear about what's happening in tax in terms of digitalization and how we see how these things that keep happening are happening in a variety of sectors, but there needs to be a common understanding of how to address them. So with my presentation, I want to speak a little bit about some of the things that our cluster has been doing around digitalization and governance. But the first thing I want to start off with is a very interesting policy note that Tony and Kevin Hernandez is no longer with us, but still part of our cluster. They developed this policy note on 4 ways that digital shapes government. We tend to think of digitalization in terms of, digitalizing different government departments, where we talk mainly about digital in government. But now things are moving where the government is trying to connect with citizens more, and we then start developing digital government services. And this is typically what we'd find with what's happening with DPI. But what is often forgotten about are also aspects of participation and digital citizen participation, or spaces for citizens to engage with government digitally, to address any grievances they have with the services that are provided. And then finally, looking at governance in a digital world, where we're having now a significant influence of monopolies, and what one of these authors has said is called tech feudalism, whereby you are now basically paying a rent to access a digital platform. And how does that translate for citizen access to services that they have a right to access? So just thinking about that, I also just wanted to talk about the phases of using digital, and just to explain the grounding around the DPI and its opportunities it presents, but as well as its challenges that follow. So when we think of the phases of digital in government, there's this really good article that gives you a staged presentation of what is happening and why government is making the decisions that it's making. So phase one, pretty much the digital in government, where it's department-wide data integration, which you could say a couple of countries are already reaching that level, although there are still a variety of challenges that still persist, as Fabrizio and Celeste have spoken about. Here, it's more related to reactive government, whereby the citizen has to fill in a very detailed form, but in this case, it's a form for each department and not one form, making the process quite tedious. And so government is trying to develop a way in which citizens only have to give information at one particular stage. Phase two now is looking at centralized one-stop shops, where citizens don't have to go to individual departments to access the service, but there's a one-stop shop with all the services that they need from government. And this has mainly been in the form of a website where you can register, like, to your birth, get a driving license, and so on and so forth. So it's partially department-wide and government-wide data integration, and gets much, much more complex because you're trying to provide a one-stop shop for citizens to access all these services. And then finally, we have the no-stop shop. And I think at this, what I'm beginning to see is that a lot of governments are trying to work towards a model that sits at phase two or phase three, where they're trying to present more proactive and predictive governance. So predicting who are the taxpayers, what compliance looks like for this particular citizen, and so on and so forth. So this is very much government initiated, and in this case, they'll probably get more people who will be paying tax. Well, that's the intention, by registering everyone through a digital ID. Okay, so I just wanted to sort of like kind of paint the picture of what is happening and what I'm hearing in terms of the trends that are happening globally in Africa, even in Asia. From our trip to Tajikistan, we also hear that this is the agenda of government. All right, so what does this imply then? Okay, I'm focusing on the no-stop shop characteristics because that is the ultimate goal, where government can be more predictive and proactive in terms of determining services, but also targeting citizens for compliance, if I'm relating it to tax payment. And we've spoken a bit about the various aspects associated with DPI, which is digital payments, digital IDs is the main one, and a data exchange. And you can see these are the foundational elements that are essential in order for government to actually apply more proactive and predictive aspects in relation to and analyzing data and making decisions. But then we ask ourselves the question, are governments at this stage yet to be able to apply a no-stop shop, or are they actually applying the correct mechanisms and governance standards in place as they work towards that, to make sure that the rights of citizens are protected, but also to make sure that their workforce is actually ready to embrace this change? In digital development, we always tend to refer to this, I think Tony even has the 5 A's, which speak a little bit to this particular aspect. Technology can also be an amplifier of existing inequalities, right? And if currently tax administration has particular issues associated with it, even though you want to introduce technology to address corruption, if corruption exists, it can also amplify it even more, with technology. So we talk about differential access. Who has access to the technology? who has access to the data that's essential in supporting tax administration, differential capacity in order to use these innovations in relation to DPI, and then motivation, which was a factor that kept on popping up. And when it comes to tax, obviously, motivation is a key aspect because you're changing traditional ways of operating, whether good or bad. So looking back at some of the various aspects that Celeste and Fabrizio have spoken about, I categorized some of those, but I also added some from what we've actually been seeing in the various programs we've been involved in. So access traditionally used to refer to, is there an appropriate technological infrastructure in order to provide the service? Do people have access to the service? Do they have enough data? Do they have a phone? And then also issues of gender and access, which varies as well. But now a new kind of access kind of really emerges here when we're trying to introduce DPI, and that is data access. There are a lot of questions around data quality that were mentioned. A lot of departments still act in silos, or there's a lot of fragmentation associated with it. This was a huge problem that happened in South Africa when, during COVID, they introduced the SRD grant for people who were unemployed as a result of COVID. But in order to access the grant, there had to be a verification across different databases in South Africa. And that obviously presented a lot of problems because there was a lot of duplication of data. And as a result, people were not able to receive their particular grants. So with these inconsistencies that persist, is government really addressing them? Are they ready to address them? Then capacity, you're looking not only at the citizens' capacity or digital literacy to actually access these services and understand how to use them, especially I've done e-filing before in South Africa and I still struggled with it. So I can imagine someone that doesn't really understand, the elements of digitalization. And then it also goes down to the civil servants themselves. Do they have the data governance capacity, cybersecurity capacity, which is a very important element when it comes to data exchange? Are they ready for change management and so on and so forth? But a most important one that I want to say, which is right at the bottom, actually should be at the top, is external processes and vendor lock-in. Even though DPI is promised to be open source, we have seen the private sector being very interested in advancing this particular approach, and they are providing their alternative solutions. But how much of a say does local government have in actually contextualizing it and appropriating it for their particular services, especially when it comes to protection of data? And then finally, motivation. Spoken about that at length, where it's a very cash-dependent society. How are they going to be interested in actually digitalizing? High tax compliance, digital surveillance, and also because they do not know about the new changes that are happening when it relates to digitalization of tax and registration, there is a reluctance to actually trust government, building on what they already do not trust in relation to government. But what I want to say is it's such a complex issue. I struggle to actually list all of them. You can see there's just too many in a slide. Don't usually have that much text in a slide. It's such a complex issue that needs further investigation and which would unfold differently in different stages of the taxation process. Registration alone could present many other aspects. What is happening globally is with the G20 recently, G20 Task Force 5 has set a couple of recommendations which combines a lot of the policy notes around digitalization of public services. And one of the things, well, a couple of the main points I want to highlight, they are calling for a common set of principles for data justice, interoperability, and openness, because there is the concern that a lot of countries in low middle income regions are not yet prepared to actually, or do not have the power to kind of set their own standards, especially when they're dealing with a vendor that they have been dependent on for several years. And they're calling for that kind of collaboration on developing data governance maturity across different countries. All right, and then and so on and so forth. But finally, I just want to talk to you about what really ideally should be happening. Okay, you can't see the citizen circle, sorry about that. What ideally should be happening, right? In order for citizens and government and civil society to deliberate around the design and governance of technology that's introduced into their context, there needs to be sufficient understanding across the different key stakeholders that are involved, because it's difficult to actually engage in co-design when there is not that kind of sufficient understanding. So not only trusting stakeholders or actors, but in the created social system to enable that kind of trust. So ideally, magically, would love to work towards that particular situation. But this is the reality of what is happening with the implementation of DPI. And it's not to say that DPI is totally not beneficial to a country. It's only beneficial when there are the right standards set around governance and the rights of citizens, so that there's that balance between digital citizenship and digital rights that are embraced across the different actors. Currently, citizens sit in the middle, not in the sense that they're taken care of, but in the sense that there's more control. So government controls, and government with vendor lock-in is controlled by technocrats as they become highly dependent on their technologies for decisions going forward. Pass on to Fabrizio.
Thanks, Caroline. Very quickly on the key takeaways from these presentations. Must be clear, of course, to everyone by now that technology is just a tool and not a silver bullet for all the evils in governments and tax administrations. But in order to fully unlock the potential of technology, some complementary investments are needed within governments. We talked about strengthening basic infrastructures, unlocking the full potential of already existing data. Think about data exchange systems and how much more data that would bring. It's important to first understand how to use the existing data. Smart change management and a coherent vision for the future. I think about, for instance, Rwanda, where the government is promoting a coherent digitalization vision for the future, and the a sound enabling regulatory background. When it comes to DPI, and this more about the future work on this, important factors need to be considered. DPI should develop in a coherent reform strategy, considering the actual needs of governments and addressing all the challenges that we discussed above. The idea is to embed DPI integration in much broader administrative reforms, where governance, frameworks, standards are set. It will also be difficult to pursue a multi-stakeholder approach, but the DPI philosophy builds on that. And another thing is, in practice, to reach that level of collaboration. And then probably the more long-term idea for the future of DPI is to make sure to reach a level in which the tax administration itself works within the DPI system, where tax data is used seamlessly and shared safely across different government institutions, like what's happening in India. I think we finished there, and we also thought about 3 open questions for discussions. Probably we don't have time, but I can just present this, and we can discuss in the future. We thought of these questions for discussions: which key factors are essential to unlock the full potential of DPI in low-income country settings? What could be the risks and unintended consequences of blindly embracing the DPI approach? And then probably more for the research perspective, how to measure the actual impacts of DPI initiatives in low-income countries. Thank you. Leave the questions there. I think you can organize your own questions. Yeah, if everyone has some immediate reactions, we can spend a few more minutes together. Yes, we have Tony and Marcus first. Oh, sorry, I think sorry.
I work in the digital cluster with Caroline. My name is Tony Roberts. I've just finished writing a book on digital surveillance in Africa, and I'm just starting a book on digital ID in Africa. So that is going to very clearly put a lens across how I've interpreted this. But I wanted to first thank the presenters. I mean, I think it's really fascinating sitting where we sit and then seeing this presentation, and joining the not fire emergency, Caroline and I were talking outside. And it's interesting how in all of the different sectors that we see, different groups are advancing this idea of digital public infrastructure. So digital taxation here, but also digital health over there, and digital ID over there, and digital everything. Every sector is being digitalized. And so from multiple points of motivation, you have this kind of flood of digital public infrastructure. Everybody's moving forward for good and positive reasons, but we're concerned about what happens when all of these systems come together. And they do all come together. In your presentation, you explained how this system locks into a centralized data registry, and it locks into that through a biometric digital ID. And the same thing happens from the digital health system, the same thing happens from every other sector. And then you get this massive system at the center. Now, if you live in a well-functioning democracy, there might not be very much to worry about with that system. In your example of Ghana, pretty good government, pretty good digital rights, pretty good governance, not too much to worry about. In Uganda, president's been in power for 40 years. It's an authoritarian state. And all of that data is being taken by the Secret Service in that country. Almost certainly it's being sold to secret services in other countries. And so as we're with good motivation contributing to the development of those systems, what do we do about, in your question too, the risks and unintended consequences? And I think that the short answer to that, because there's a very, very long answer, the short answer is that you need to have, probably as your first line of defense, human rights. And as researchers, what is probably most helpful is some kind of power analysis. So the first line of defense, human rights, works very well because in every country, the state has already signed up to a set of principles that are very well articulated, and all parts of civil society and government and business have that common language. And human rights is a pretty good way of defending against the risks and unintended consequences of this technology, like many others. But what's really missing is power analysis. So this system is often presented in very neutral terms as a public good. And I like to pay my taxes. I feel a moral obligation to pay my taxes. I believe taxation systems are a public good. But if I didn't have all of the different levels of privilege that I have, and I was living in a different country on the breadline, unable to pay my children's school fees, or I was an activist who already knew themselves to be under surveillance by the state, I had a very different positionality, and I'd be worried that digital taxation is a surveillance system, it is a policing system, and it locks into a bunch of other surveillance and policing systems. So, yeah, that's what I think.
Well, actually, my question wasn't related to this point, but briefly, I was thinking that it's true what you were saying about the high surveillance. At the same time, are we sure that even without the digitalization, secret services, government, still don't get there the same amount of information? Just probably could be easier if they were having a digitalized database, yet, and not only developing country context, it's also in developed countries, what we consider democracies, that the high surveillance still happen somebody to fly to other countries to find asylum. So it is a big discussion, it's a big debate, I agree. So probably has to be who owns the data and where these data are stored. And then it's all about the server and where are the servers located and who can get access. Still, probably Secret Service is a government who still get access to them despite everything. And there could be any type of country. So my point was related to the last slide about India. That is interesting that about the data sharing across the institution. It's very important, yet less than 10% of people pay taxes in India. So it is important, yet there are digital public infrastructure, digital merchant payments, and not only in India since ages, yet less than 10% pay taxes. And it's not true that 90% cannot afford it. Right, there is a bigger debate. So it's also really interesting to what extent the data sharing could allow or not, because it goes beyond probably utilization of information.
Thanks. Yeah, please. Michele.
You can hang out. No, I was trying to figure out the purpose of the seminar, as in why am I here? Besides the fact that I have a lecture next week on bureaucracies and bureaucrats and different reforms, and one of them is e-governance, where DPI fits in nicely. But I was just thinking in terms of way forward, kind of, bless you, from an academic perspective, there were a few things that you guys, particularly Celeste and Fabrizio's research, of things that I'm thinking, I would like to know a bit more on this. And there's a few things you're saying. One of them is COVID, right? To what extent can you pull out COVID? And you see, for instance, in terms of increase of registrations, things like that. To what extent, because we're noticing this in other pieces of research, that COVID becomes a window of opportunity, but not COVID alone. I mean, there's other things besides COVID. So I was wondering to what extent, so for instance, we keep on saying, you know, in terms of increasing digital presence, well, COVID helped. Okay, so what about now? There's no COVID, and we're assuming maybe nothing like COVID in the next decade or so. So what triggers increasing enrollments and things like that? So that was one thing that I thought could be interesting, pulling and playing with COVID around. The other one is on, it looks like what you're trying to hint at, for which you need more studies, is that mass registrations don't work. And I think that there's something there about that finding, which could be interesting, because I can see a lot of governments just going for mass registration because it's easy, right? But if you can actually show that actually it's easy, but it's useless, right? Or creates more problems, particularly in terms of adoption. But at the same time, there was one of the slides that you mentioned that for the data, to increase the quality of the data, you have the role of the registry cleaning team. And as soon as you bring humans in, then that's my stuff on bureaucracies and discretion, is how much discretion they have to what extent when they're choosing, you know, they're going through the enrollments, through the, I was going to say candidates, through the individuals, to what extent, how much discretion do they have to decide who goes in or not into this quadrant or in this quartile or not? Is it a matter of, I woke up this morning in a bad mood, I'm going to delete them all or not? You know, the usual thing with frontline workers. I think there was one. Yeah, my third one, which is, I'm going back to the point that this is a blog that I will write one day about the problem with automation, which is, again, going back to discretion. A lot of the times, and this is discussions we've been having with the digital crowd as well, which is a lot of the times, the more marginalized groups in society tend to use the informal, not because it's illegal, but because they don't have the tools, the instruments to access the formal. And so part of that is storytelling. And, you know, so for instance, if you get on an EasyJet flight now, until recently, you could go and, you know, if you have 21 kilos and you're allowed 20 kilos, you can chat your way in, right? You can be street smart. You can't do that with an app. And big generalization here, but but the more informal you are, the more you can kind of navigate this, and to what extent this automation, this digitalization makes it harder for people that tend to be more informal for a reason, not necessarily because it's illegal. So there's a couple of these little bits that I thought that I wanted to hear more, as in more research. Thank you.
I was just going to quickly drop in without wanting us to get too much into this one specific discussion, a reaction to the discussion that was coming here from the international side. So I don't know if you know this, but if you're from a OECD or G20 country, but not from Britain, then your tax records are automatically being shared with your home country already. If you're from the US, your bank details are being, your bank records are being shared with the IRS in the US. And actually both Ghana and Uganda, I think Ghana this year and Uganda next year in principle should be joining that system. So they should have access to their citizens' tax records from all of those other countries and vice versa. Now to get there, they've had to jump through a lot of hoops and have to invest a lot of money in demonstrating that they have the legal and the technological protections in place to safeguard that data. So I think there's an interesting aspect to this, some of the points around taxpayers' rights and human rights here, around how, to some extent, that international process is kind of exporting some of the protections, maybe, if protections is the right word, that we might have here that they wouldn't have in Uganda to that context. So I was really interested when you said about, you know, the Ugandan Secret Service will probably be selling this information to others, because I know that the thing that has the OECD, who are the people leading this process, are most scared about this is that as more and more countries come into this system, one day there will be a story in which a member of the elite in an autocratic or not even an autocratic necessarily country finds themselves persecuted because of tax data which was sent and then was used inappropriately. So there's a real anxiety about that. And so I think the way in which this international mechanism interacts with some of the dynamics you've described domestically is going to be really interesting to see as more and more lower income countries come into this system. So sorry for slightly hijacking. Okay, I guess back to you guys to conclude.
Thanks. Yes, very quickly on Tony's points, I would love to be in touch on your ongoing work on digital IDs, because we are committed to do work on this for the next 3 years. So it's just great that the cluster is doing work on that as well. I think, yes, we should definitely be more careful and do more research around how the data is managed, owned, and shared. Yes, you know, those patterns you mentioned, somehow they sounded new to me. We need to include these elements every time we study a DPI solution in Africa, elements of ownership and governance. On Marco, yes, what's happening in India with the tax data is that now your returns and payments data are automatically shared with other institutions like financial sector, like banks, or thanks to new regulations, which is very recent, by the way. The idea was exactly to move from to a better compliance context. Now, every time you open a bank account, you have to show your tax certification number, which also has to be linked with your digital ID number. Banks have access to your returns history, tax returns history, and then they can build a credit score or a risk score on your profile, and that would facilitate lending. The idea, at least in India, for the government is to make sure that this tax data has some public value for the citizens. The citizen own the data, its own data, and then he maximize the benefits from it by accessing all the services. And, you know, the points of Miguel's, they are super interesting. We have just lots of anecdotal evidence on the role of COVID. Also, we did some study on the mandating technology during COVID, like in Eswatini or in other contexts as well. When the pandemic happened, most governments in Africa just switched automatically to digital, you know, not accepting any more paper-based returns. There was a huge shock for everyone, imagine, for the whole population of taxpayers. And we, you know, results are not, you know, adoption is not universal, even when it's mandated. So, and But that helped leapfrog many countries leapfrogging the digital frontier. Definitely, we should do more work on that. I'll leave the point of mass registrations and the cleaning team to Chele because I think she's much more on top on that. The last point you mentioned, yes, we have lots of qualitative evidence from our survey work showing how technology, and that's a point Caroline was making as well, how technology actually would exacerbate existing challenges and differentials in access, especially for the less equipped taxpayers. For instance, in Rwanda, once the deadline for filing through the e-government platform, by the way, passes, there are automatic penalties coming in, they're triggered. And that caused, as we show in our survey work, huge frustrations in taxpayers, fear, and just that in turn affects their own perceptions of the whole government machine as a whole. So yes, the fact that large number of Rwandans still prefer going face-to-face and meet the bureaucrats in government offices is also because of that. Because they're more scared of the rigidity of technology, and they would prefer having this more, negotiating sort of conversation with tax officials. Yeah, that's an extremely good point, and happy to talk more on that. Shall I add something?
Yeah. So if I understood, you left out the question about mass registrations and then the registry cleaning team. I think that it is true that our results point in the direction that mass registrations don't work. But I think, for example, so I think that's true. And I think that in our papers, we can see, I mean, we have like quite a lot of evidence, especially qualitative evidence that comes from interviews that Fabrizio and I have run at the Revenue Authority with the revenue officials. That explain how, like, what are the challenges, and like these are mostly related to data quality and to the fact that this data is, yes, improved to some extent. For example, like they don't have like duplicates anymore, but they have much more issues like into reaching out to taxpayers, communicating with them, and then, yeah, starting, let's say, with them the compliance journey. I think related to, for example, digital ID systems, I think that the point is how this technology is used, in the sense that, for example, when the ID data is used in a kind of voluntary system of taxpayer registration, it does help in some way improving, for example, how quickly a taxpayer can register and how accurate are the data, like about his, like their, the main information. It doesn't help at all when this same exact tool is put in the hands of an officer who has to register as many taxpayers as possible in the same day. So it's really like about, I guess, the kind of channel and the intention of how this, like, who has this technology and in its hands. And then talking about the registry cleaning team, I have not delved into how much discretion these people have, but it is definitely, I mean, an interesting thing, like, especially because I like on separate work in Rwanda that I'm doing, it is clear how much like discretion is like important in this kind of practices. So I can't answer how much they are discretionary in their action. They're definitely very, very important in the sense that the taxpayer registry would not look the same as it does now if it wasn't for the presence of this team. Yeah. Yes. I don't know if perhaps.
I'm thinking of, was it Miguel's question about what's triggering digitalization? And I think we need to ask ourselves who has the power around digitalization. I think it's mainly the big tech companies and how there's now the debate now how capitalism is dead. I think Tony might agree with me, I don't know. But now how what's happening in society is that companies are trying to see how can we actually get people to use our applications and to keep them. And one of them is to understanding behavior through data. And because of that, they obviously come under the guise of new platforms that are essential, like DPI, for example, AI, and so on and so forth. And so it's basically the super tech superpowers globally. And you ask the question, where do they reside? And then think of, how they actually align with those particular governments.
Just to add a thought on what Caroline said, I tend somewhat to disagree. At least from my experience of gauging the environment, the landscape of digital reforms in Africa, my feeling is that there are some contexts in several countries where there are leaders, national leaders that embrace a new vision based on digitalization, of reducing corruption and inefficiencies. Building in-house solution, building local capacity. So probably the truth is somewhere in the middle, I think. I have that feeling. But in some countries we work in, the national governments support this process of capacity building in terms of this, of IT skills and software engineering, and they own their own solutions, their own data hubs and all that, which is great. In other countries, yes, for sure, there is that presence of big tech companies. It's probably somewhere in the middle.
Yeah.